SoFi Stock Catalyst. Cathie Wood of ARK Invest buys $10 million of Palantir stock. Hi there and welcome back to our channel. Today, we have some thrilling developments in the world of finance that are bound to get your investment senses. The financial markets are always abuzz with news, and today, we'll dive into 3 key articles that have been making waves. First up, we'll discuss SoFi to participate in an upcoming investor conference. This is a groundbreaking move that could potentially reshape the future of SoFi and the entire fintech industry. Stay tuned as we break down what this means for investors. Next on our radar is the article titled, Palantir stock falls 9% after Morgan Stanley cuts rating. A drop in stock price is always a cause of concern, but understanding the reasons behind it is crucial. We'll analyze the factors at play and how they might affect your investment strategy. And finally, the highlight of today's episode. Cathie Wood, the legendary investor behind ARK Invest, is making headlines once again with her strategic moves. Find out what this multi-million-dollar purchase of PLTR stock means for the future of both Palantir and Shopify. So grab your notepads and get ready to embark on this financial journey with us. If you're interested in the latest market insights and investment opportunities, this episode is not to be missed. Let's dive in and decode the SoFi Stock Catalyst. SoFi to participate in upcoming investor conference. First, some exciting news hot off the press. SoFi Technologies Incorporated, the digital personal finance company, just dropped the bombshell that they'll be participating in a high-profile investor conference. So what's the scoop? Well, on September 6, 2023 at 1:05 p.m. PST, you can catch SoFi's Chief Executive Officer, Anthony Noto, in a moderated fireside chat discussion at the Goldman Sachs Communicopia Plus Technology Conference. Now I know what you're thinking. Why should I care about a conference? Great question. These kinds of events can be major game changers. It's like a sneak peek into a company's playbook where they spill the beans about their future plans, strategies, and goals. And trust me, you don't want to miss on that. If you can't make it to the live chat, fear not. They'll have archived webcasts available for on-demand viewing. Just head over to SoFi's Investor Relations website in the Events and Presentations section and you'll find all the juicy details. Now, let's talk a bit about SoFi. They're all about helping people achieve financial independence to chase their dreams. They offer a wide range of financial products and services, from borrowing to saving, spending, investing, and protecting your money, all wrapped up in one neat app. They've got over 6.2 million members who benefit from career advisors, financial planners, exclusive experiences, and a thriving community. But here's the kicker. SoFi doesn't just stop at personal finance. Nope, they're innovating across 3 business segments: lending, financial services, which includes checking, savings, credit cards, investments, and more, and a technology platform that's changing the game. Oh, and did I mention they're involved with something called SoFi Stadium? That's right. They've got naming rights for the home of the Los Angeles Chargers and the Los Angeles Rams. They're all over the place, so if you're curious about SoFi's future plans, financial innovations, or just want to stay in the loop, this investor conference could be your golden ticket. Palantir stock falls 9% after Morgan Stanley cuts rating. Now, it's time to talk about Palantir Technologies and a little dip it took in the stock market. You know how the market can be, right? On Thursday, Palantir stock decided to take a bit of a tumble, falling around 9%. So what's the deal, you ask? Morgan Stanley, the financial heavyweight, decided to downgrade Palantir's share to underweight. But hold on, it's not all bad news. They also raised the price target on the stock from $8 to $9, so it's kind of like a mixed bag of opinions. Now, Let's break down why Morgan Stanley made this move. According to their analysts, there's a bit of near-term optimism in the AI product cycle and some fancy valuation premium stuff going on. But here's the kicker. They think this creates an unfavorable risk-reward situation for the stock. Why, you ask? Well, it all comes down to the visibility of Palantir's artificial intelligence platform, or AIP monetization. You see, it's not crystal clear how Palantir is going to make money from it, and that's a bit of a concern. Plus, they're not banking on the government segment to swoop in and save the day either. Morgan Stanley's analysts are a bit cautious, thinking there might be delays in AIP revenue contribution, especially since Palantir hasn't quite figured out how to cash in on it yet. And there's the risk that the government business might not be able to offset any slowdown in the top line, which seems to be showing signs of wear and tear lately. But that's not all. Morgan Stanley is also looking at the bigger picture here. They think the second half of the year could be a bit tricky because the revenue outlook already implies an acceleration in estimated organic revenue growth. In simple terms, they're saying the bar is set pretty high for the stock to keep up its positive momentum. Now, here's the interesting part. While Morgan Stanley isn't seeing the highest praises for Palantir, Seeking Alpha's quant rating system gives it a strong buy rating. These folks have a track record of beating the market, so it's definitely worth noting. But on the flip side, if you look at the average rating from Seeking Alpha authors and Wall Street analysts, it's a bit more cautious, leaning towards hold, so it's like a tale of three opinions here. In the ever-changing world of stocks, it's essential to take these opinions into account, but also do your homework and make your own judgment. Palantir's got some exciting stuff going on, but as always, the stock market can be a wild ride. Before we end this video, do you know Cathie Wood, the mastermind behind ARK Investment? Well, she and her team have been making some intriguing moves in the stock market. So here's the scoop. Palantir Technologies Incorporated and Shopify Incorporated were the stars of the show in Thursday's trading session, and Cathie Wood's ARK Investment didn't waste any time making some strategic adjustments. First up, Palantir stock decided to do a little dance, dropping more than 8% during the day. But guess what? The ARK team swooped in and grabbed just over $10 million worth of Palantir shares. The flagship ARK Innovation ETF added a whopping 525,000 shares of Palantir to their portfolio, valued at around $7.9 million. Meanwhile, the ARK FinTech Innovation ETF snagged about 58,000 shares, totaling approximately $874,000. And the ARK Next Generation Internet ETF got in on the action too, purchasing roughly 89,000 shares worth just over $1.3 million. Now, why the sudden interest in Palantir? Well, it turns out that Palantir shares faced a bit of a pressure after Morgan Stanley threw some shade, suggesting that the company's valuation was a tad too high and that it might take some time for their AI offerings to rake in the big bucks. But that's not all. While Palantir was having a tough day, Shopify's stock was on a rocket ship, surging nearly 11% higher. And what did the ARK funds do? Well, they decided to take some profits off the table. The ARK Innovation ETF trimmed about 126,000 Shopify shares, valued at almost $8.4 million. The FinTech ETF followed suit by unloading nearly 14,000 shares, worth about $911,000, and the Next Generation Internet ETF sold more than $20,000, totaling approximately $1.4 million. All in all, that's a cool $10.7 million in sales based on Thursday's closing prices. And here's the kicker. ARK Investment doesn't spill the beans on the average prices at which they make these transactions. They like to keep us guessing. But don't worry, The ARK funds that played with Shopify stock continued to hold positions in the company, so it's not a complete breakup. Shopify stock skyrocketed because they sealed the deal with none other than the Amazon.com Incorporated. That news seems to have lifted some weight off their shoulders, and investors were all in. So there you have it, folks. Cathie Wood's ARK investment, always keeping us on our toes with their moves in the market. And that's it. We hope you enjoyed this video. If you did, don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one.